So how are public equity markets, especially in small and mid-cap segment, impacting SPAC redemptions and aftermarket performance?
Yes, SPACs are very sensitive to broader market sentiment, especially sentiment in the small and mid-cap space, because that's where a lot of the de-SPAC, land. They're usually companies in market caps under 5 billion, and very often they're under a billion. And when the markets are risk on, redemptions drop, stocks trade better. But when volatility picks up, interest rates climb, investors get more cautious and often redeem their shares rather than kind of stay in the entity post-merger. They don't want to assume that equity risk after the de-SPAC. That being said, momentum matters. De-SPACs in sectors with strong secular tailwinds like AI, like clean energy, like infrastructure, tend to hold up better. There's also a growing understanding that, among targets and the management teams and the targets, that the valuation and narrative play a critical role. If a company is perceived as a good value with a clear, credible story, we're seeing better trust retention and a stronger aftermarket performance. Now, some companies in their early days post de-SPAC, have traded sideways for a while until the management and the target hit milestones, and then we see a turn in the overall sentiment towards this company, and the stocks begins to perform strong. So the aftermarket performance is not just about the macro factors. It's about execution. It's about perception. It's also about timing.